This was the single largest stock market debut in human history. $75 billion raised in one day. That's more than the entire annual budget of many countries. But here's the part that doesn't add up. On the very day it rang the bell, this company was still losing money. In fact, it had been losing money for 24 straight years, burning through more than $40 billion along the way. So how does a company that lost money for 18 out of 24 years become the hottest ticket on Wall Street? Today, let's pull back the curtain on Elon Musk's greatest magic trick yet. Let's start with the facts. On June 12, 2026, SpaceX officially listed on the NASDAQ. The shares were priced at $135. They opened at $150 and closed around $161. That's a jump of more than 19% in a single day. The company's value shot past $2 trillion, making it the sixth most valuable public company in America. And on paper, Musk's own net worth crossed $1 trillion, making him the first trillionaire in history. It sounds like a flawless victory. But buried inside the prospectus filed just weeks before the bell, there was another set of numbers. In 2025 alone, the company lost nearly $5 billion. That made it the 18th losing year out of 24. Add it all up, and since it was founded back in 2002, the company has lost roughly $41 billion. In 24 years, it has turned a profit exactly once. And there's one more strange detail. On the first day of trading, only about 4% of all shares were actually available to buy and sell. Tiny supply, enormous demand. The price had nowhere to go but up. So the real question is this: what exactly was the market paying for? To answer that, we have to take this company apart. SpaceX today is really three businesses stitched together. The first is Starlink, its satellite internet network. This is the real cash cow. Last year, it pulled in over $11 billion in revenue, more than 60% of the entire company's income, with over 10 million users worldwide and very healthy margins. The second business is the one everyone knows: rocket launches. Thanks to reusable rockets, SpaceX controls roughly 80% of the global commercial launch market. Impressive, right? And yet, this part of the business still lost money last year, more than $600 million. Because the Starship program alone burns through about $3 billion a year in development costs. And the third business is the one a lot of people call the money pit, the artificial intelligence and space-based computing arm. Its research spending exploded by more than 300% year over year. In fact, some analysts have estimated that at the current rate of losses, this one division alone could wipe out every dollar of profit that Starlink works so hard to earn within just 4 quarters. So now you see the picture. It's really Starlink, the one cash cow, quietly feeding two enormous money-eating beasts, the rockets and the AI. And this is where it gets clever, and honestly, a little chilling. As one analysis put it bluntly, a company that was actually profitable was, through a single merger, transformed into a loss-making company right before going public. And that wasn't an accident. It was the design. The logic is simple. Starlink on its own makes around $7 billion a year. It's a good business. But the moment Musk folded the cash-burning AI operation into the same balance sheet, the overall numbers flipped, from profit to a massive loss. But the story sold to the market was never, "We're losing money." The story was, "We are placing a bet on a trillion-dollar future built on artificial intelligence, space, and Mars." There's one self-contradicting little detail in the prospectus that says it all. On one page, SpaceX claims its orbital data centers will replace ground-based data centers within 2 to 3 years. And yet, it also signed a lease for ground-based computing power that runs all the way to 2029. If they really believed their own timeline, they would never have signed that contract. At the end of the day, Musk has never been selling you a rocket company's financial statements. He's selling you an option on imagination. Mars colonies, 100,000 satellites, an AI brain orbiting the planet. And imagination is exactly what Wall Street is hungriest for. Now, here's the part that matters most if you're a regular investor, so listen closely. When you bought a share on day one, that money mostly did not go into SpaceX's bank account. It went to the people who got their shares early, at a tiny fraction of the price, and were now selling them to you. The people who truly took the risk and backed this company were the early investors. The retail buyers rushing in on day one are, in effect, just providing the exit liquidity for everyone who came before them. And remember, only about 4% of shares were trading freely. Scarcity plus hype pushes the price up fast. But a price that's been pushed up like that is not necessarily a comfortable place to buy. And here's where it gets even stranger. Because the price wasn't just being lifted by hype, there was a machine quietly forcing it higher. To get SpaceX in, the NASDAQ actually rewrote its own rules, allowing the company to join the NASDAQ 100 index just 15 trading days after listing, instead of the usual 3-month wait. And the moment that happens, every single index fund that tracks the NASDAQ 100 is forced to buy this stock, whether they want it or not. Analysts at BNP Paribas estimate that this forced buying could pour around $8 billion into the stock in the first month alone, and that total passive demand could eventually climb as high as $30 billion. Now put those two facts together. Index funds are being forced to buy into a pool of stock that is almost laughably small, because nearly all the early shares are still locked and can't be sold yet. Tiny supply, mandatory demand. That's not a market finding a price. That's a self-reinforcing spiral, pushing the stock up and up and up. And here's the quietest part of all. If your money sits in a basic index fund, you may already own a piece of SpaceX, not because you chose to, but because the rules forced your fund to buy it for you. But every spiral has a ceiling. Those early shares are locked up, and they do not stay locked forever. The first major unlock is expected around late July, when roughly 20% of the shares get freed up, with more waves to follow, and the full unlock arriving in December. And that is the catch. The very same scarcity that rocketed the price upward on the way in could just as easily drag it back down on the way out, the moment all those early investors are finally allowed to sell. So is this company actually worth $2 trillion? Honestly, even the professionals are at war over it. The banks that underwrote the deal, like Morgan Stanley and Goldman Sachs, are bullish, of course. They point to Starlink's moat and the growth potential of AI. But on the other side, long-term institutions like Danish pension funds have come right out and said the valuation is inflated. That based on cash flow, a fair value shouldn't exceed $1 trillion. Even the asset management giant Fidelity admitted that roughly 30% of this valuation is simply a premium on Musk's personal brand and the AI hype. For some perspective, this company is trading at over 100 times its sales. Tesla trades at around 15, Nvidia around 20. The same prospectus, and some people see a fortress, while others see a bubble. And that disagreement itself might be the most honest footnote on this entire deal. Finally, let me leave you with the single most striking detail of all. This entire $2 trillion story rests on one foundation: Starship. And yet, as of the moment the prospectus was filed, Starship had completed 12 test flights, but had never once successfully delivered a single commercial payload. Not one. That technical-sounding detail is actually the physical foundation of this whole trillion-dollar narrative. Whether it pays off or not will decide whether all of this turns out to be a journey to the stars or the gamble of the century. Of course, some people have already cashed in. On listing day, even the welders and the cafeteria staff at SpaceX became financially free through their employee shares. Plenty of people are celebrating. It's just that the ones celebrating may not be the ones left holding the baton at the very end. So let me ask you, a $2 trillion SpaceX, are you getting on board or staying on the sidelines?